Welcome to Investing Confidential. You've been hearing a lot about China the last few days, especially today. If you've been watching my videos, you know that I've been warning about this whole zero COVID thing, that despite the movements in the market and everyone being enthusiastic, it's a disaster. But if you're an investor, okay, I don't care whether you're investing in the US or Europe or anywhere, you got to really be concerned because there is something really negative brewing. And I'm going to discuss the facts behind this whole Chinese disaster. So let's start first about this whole policy. What is zero COVID policy? Well, it is what it is. Zero COVID policy is something the government has, the Chinese government, the CCP, started basically to keep their citizens calm. One thing that the pundits around don't talk to you about China is very important in the fact that the government fears only one thing. Okay, remember this throughout the entire video. Or if you're looking at anything that has any kind of exposure to China, Chinese government fears one thing. They don't fear the US, they don't fear Russia, they don't fear anything. They fear their own people. Okay, historically, again, if you have a historical perspective, China has the problems Chinese have, especially the government problems China's have always been social unrest. Okay, sure, they've been invaded by Japan and other things, but the biggest problem that the government officials and people in power have had through the years have been their own people. So let's talk about knowing that. Let's talk about what's going on today and how China handled this pandemic, which is completely wrong. So we all know that the virus came out of China, okay? Whether it's man-made or not, I'm assuming it's man-made, but I don't think the Chinese government did it on purpose. Obviously, they didn't want to destroy their economy, affect the rest of the world, kill millions of people, which they did. But anyway, long story short, it came out of China. So what did the Chinese government do? They've been cracking. So this virus came out most likely in September. I was actually in China in December of 2019 while this was going on. I was in Beijing. I was in Shenzhen. I was in some of the cities closer to Hong Kong, and I noticed weird things going on. But certainly, I didn't know about any pandemic until I got back to the States. But this has been going on for a while. The Chinese government have known this, and the Chinese government has been trying to quietly crack down and try to solve this problem by isolating parts of the population. We know now, looking back, that that's a failed policy, right? Anyone who's tried to do it, it's failed, simply because the COVID-19 virus is incredibly infectious. And fortunately, it's not as deadly as it once was in the beginning. It is morphed. Every time it jumps to a human host, it gets weaker and weaker. So the bottom line today, it's not what it was, let's say, in late 2019 when I was in China. So what has happened now? So the Chinese government has essentially locked down the country for 2 years. Okay, you couldn't go in, couldn't go out. The draconian measures were taken. And now with this zero COVID policy, what it basically means is if one person gets infected, like one person got affected in Beijing, they lock down millions of people in the entire district. Okay, the way China works is they have rings. So the center of the ring, let's say, is the center of the city, and the rings go out. And in Beijing, they have something like 20 different rings. It's a massive city. So if you're in ring 4 and someone gets tested positive, the military will come in and cordon off, basically millions of people. And those millions of people have to test every single day. It's a nightmare, absolute nightmare. So let's first look. I mean, we've been seeing this in other parts of China, but now we're seeing this in Beijing. Beijing right now, you can't go to a park. Okay, you can't go to a park. Shanghai shut down. You can't go in or out. I mean, this is a nightmare. Look at the daily cases. Okay, daily cases have exploded in China. Okay, they are through the roof. They're now surpassing the worst parts of the pandemic when they were in big problems. And certainly, they're reaching, as we can see here this morning, they're reaching 30,000 plus cases a day. Now look, that's coming out of China. Okay, we can't trust the numbers. So the numbers are significantly higher than what they're actually saying. And the cases are rising, and the cases are rising now in the big cities, the large cities where they've tried to keep the virus out of, because obviously if the virus is in, it started in Wuhan, which is a very large city in China, but they kept it isolated there for a while. It spread to some smaller cities in the north, and they were able to lock down. These when I say small cities, these are like a small city in China is like 5 million people. I mean, not like here. And they've locked down millions of people. And now it's spreading to the large cities, as you can see here. And it's hitting their GDP. It's hitting their growth. Their growth is now plummeting. China's technically in recession. Okay, and I'm going to explain why that's incredibly important if you're an investor, and you've got to understand this. But the bottom line, as we continue, the bottom line is the whole country is screwed. The government has lost control of the zero COVID policy, and now the worst case has begun, because now they're seeing social unrest. Okay, they're getting pushback, as you can see here. People are protesting. Okay, here's a video. And I think most of you have seen this video. This is the Foxconn where Apple is. And this is a city, okay, city of 250,000 people just dedicated to Foxconn. They live there, they work there. I mean, I hate to say it's not slave labor, but it's close to it. And yet it's high-paid slave labor, by the way. But here we are, people have had enough. They're locked down, they can't get anything to eat. I mean, they're protesting. And this is the worst case scenario for the Chinese government. And this is going to force them into doing things that are incredible. So what are they doing? Let's take a look here. This is unbelievable, okay? But this is true. If you're watching the World Cup in China, okay, you're seeing the game. But every time the media flashes to the stands, it's fuzzy. You can't really see, because nobody in the World Cup is wearing a mask, okay? And in China, you have to wear a mask anywhere you go, outside, inside, don't matter. So they don't want people to see that. So they're censoring. Okay, you think we got censors here in the U.S.? People complain about Twitter, etc. Look, the censorship in China is beyond anyone's comprehension. Okay, I've been seeing it for years. I've been to China, over 20 times. I visited, 30 different cities around China. I mean, it is incredible the amounts of censorship that's been going on from day one. But the Chinese have lived with it, and now, okay, now they're unhappy because they're seeing what's going on. They're saying, wait a minute, there's something wrong here, and the CCP, the Chinese government, is very, very concerned. Okay, very concerned. But what does this all mean? Okay, from an economic standpoint, this is very significant, and I'm going to go into the political later. But so the economic standpoint is, you are seeing consumer demand, all right? Consumer demand, which really drives everything in around the world, absolutely plummeting in China, okay? So no one's buying anything. People are protesting. People have stopped paying their mortgages, okay? It is unbelievable, the pushback that you're seeing from consumers. The consumer that everyone in the world wants, every manufacturer, every luxury goods, everyone wants to tap the Chinese consumer, right? That's the whole thing. The nirvana in the world is China. And now there's nothing left, okay? The consumer has stopped. They're finished. Now let's take a look at the property downturn, which we've talked about many times. This is the engine for growth. I keep repeating it. Without the property growth, or without the manipulation of property prices and development and the forced development, China would not be where it is today. So if you see here, their engine of growth that has driven their GDP for 25 years is gone. It's gone. Okay, it is incredibly significant that it is gone. So what's the result of this? Here's an example of how it's going to impact everyone. Apple. To me, Apple is the canary in the coal mine for China. So if you want to see what's going on, if you want to play China, Apple is the way to do it. And Apple's got serious problems. Okay, you don't want to. What they're saying publicly, behind the scenes, they got worse problems. They got shipping delays. Not only that, they say shipping delays. What they're trying to cover, folks, is they've got demand problems here in the U.S., demand problems in Europe. So what is Apple going to do? Well, they're going to play this game. They're going to play this game like the real estate guys did, and the car industry made you think that there was a shortage and try to get you to go crazy and buy. It's not going to work this time. It's not going to work. So Apple's got legitimate shipment delays, legitimate manufacturing delays, but they got bigger demand problems all over the world. So, folks, if you want to play China, you want to play negative China, Apple is the way to play it. Okay, because Apple is the canary in a coal mine for this entire disaster that's going on. So how are the markets positioned? Well, take a look here. U.S. investors from a week. This is a little bit old, but it's kind of relative, valid for what I'm trying to say. We had a rally in a lot of the Chinese ADRs and companies in general based on this whole thing that zero COVID, zero COVID is going away. The brokers don't listen to anybody. But unfortunately, people did. They bought up, as you can see, they bought up a bunch of call options on China and started playing options. People ran in to play the rally. The rally lasted 1.5 days and it faded, as I said it was going to. And it will continue to fade. So if you have these options and you're holding for a rebound, forget it. There's going to be no rebound. Okay, folks, there's going to be no rebound. The Chinese market has been depressed. Do not pay attention to people tell you the Chinese market's cheap. It's not cheap because their earnings haven't even yet caught up to the disaster that's happening internally in the economy. So it's very important to look at this. So this is where the opportunities are for the future. If you're watching this channel, obviously it's Apple, but look at the emerging markets overall. If you look at the emerging market indexes, they have massively underperformed the U.S. Rightly so. That's because of the U.S. dollar. And we look at this over time in this graph. It's more exacerbated because China has been the Chinese market has been such a nightmare. But what you're not seeing here is there are what we call green shoots in other parts of the emerging world, places like Brazil, places like Chile, places like South Africa, believe it or not, where things are going better. Right? They got through COVID. They let it go through the economy, so COVID is no longer an issue. They raised rates way before the U.S. Now they're starting to cut rates. Inflation is dropping. The demand for commodities continues to rise, all right, because, as we said before, inflation is coming down, but it's not going to be down the way the Fed wants it. So the bottom line is emerging markets, ex-China, is where you want to be. And the indexes, unfortunately, the ETFs, which I think have a weighting of almost 50% China, are where you don't want to be. You've got to choose your bets, as I always said. Look at ADRs, look at individual companies, much better than going into an ETF. So here we are. China's burning. No one understands. The ramifications are dire globally and financially. So as an investor, be careful out there.